everyone is starting to connect the dots.
So now we're just facing that classic gap of 2 to 3 years of underinvestment.
The big question is how long it takes new supply to come through.
In the next few weeks, the JORC resource first, and then the PFS results after that.
It's a large property, so area-wise, 1 or 2% of the entire land package is included there.
Welcome back to Rockstock Channel. It is Thursday, April 23rd, and we're back with another weekly Rockstock recap. Last week, we talked about how we're navigating this market, and we relaunched our Patreon tiers, where we'll be sharing more of our proprietary work, including select research like what we'll be discussing today. We're going to start with lithium because we've now got two fresh institutional outlooks this week from Benchmark and Canaccord. Both are aligned on this year, 2026, calling for a tight market, supply constraints, and higher prices driven by feedstock bottlenecks and conversion capacity issues. But Benchmark is taking a more cautious stance into 2027. They've upgraded their demand methodology, integrating both first-use cathode demand and second-use battery cell demand, which smooths out some of the lumpiness, particularly from energy storage systems. This leads them into a deficit for this year, but a surplus in 2027, with prices reverting back down the cost curve from incentive levels. Benchmark caveats, however, that this surplus call is far from a done deal, as a huge part of it depends on Chinese lepidolite supply, specifically CATL's Jiangsu mine, coming back online. And outside China, they see risk stacked everywhere from Nigeria, Zimbabwe, Mali, and Africa broadly. Canaccord, though, is leaning more into structural deficits, extending well beyond 2027, driven by supply disruptions, rising capital intensity, and importantly, demand resilience, especially from energy storage, and now oil-driven EV demand. It's now April, and forward-looking equity markets will no doubt be questioning if Benchmark or Canaccord are right. Matt, Rodney, and I all have scars from the structural deficits as far as the eye can see narrative from a few years ago. So a key question is, can supply keep up in 2027 and beyond, as we were surprised that it did in 2023, 24, and 25? We'll talk more about that in a minute. But stepping back, this ties directly into something we flagged a few weeks ago. U.S. EV sentiment had gotten so negative it felt fully priced in. And what we're seeing now is an oil shock driving a demand response in the U.S. as well as in Europe. European EV sales were very strong in March. And the China EV overcapacity narrative is shifting. Dealer inventories are tightening to single-digit days in places like Australia and elsewhere for Chinese-made vehicles like BYD. We referenced a TD Cowen note a few weeks ago, saying that U.S. EV sentiment had gotten so one-sided it was already priced in with upside risk from a demand shock. Tesla reported yesterday, and while the financials were strong, the forward-looking narrative was less EVs and more scaling humanoid robots. Optimus, with potential production capacity in the millions, even referencing long-term scenarios in the tens of millions. And here we'll have some caution, because I remember in 2020 Battery Day, Elon talked about 20 million EVs in 2030, which he'll be far from reaching. So a 10 million humanoid robot forecast should be taken with a pinch of salt. But directionally, this is another big demand driver for rare earths, magnets, titanium, and other advanced materials, including lithium, at scale. And then, if we overlay the Department of War's 2027 budget, this is a $1.45 trillion request, a $440 billion increase year on year, which includes tens of billions into critical minerals and supply chains, massive scaling of munitions, missiles, autonomous systems, and AI infrastructure, batteries, and electrification of the military stack. Over $48 billion directly targeting critical mineral shortfalls and domestic supply chains. The EV story continues to get stronger despite the headlines, but I think we are very much in the early innings of Mr. Market beginning to appreciate the mass impact of AI, defense, energy security, and industrial policy, all converging on the same set of materials. Our little critical minerals niche space is moving to mainstream. Silicon Valley, defense, DC policy, everyone is starting to connect the dots. Traditional blue-chip venture capitalists like Chamath Palihapitiya and others are further engaging. Chamath Social Capital put out a solid deep dive on critical minerals this week. The 60 Minerals That Power the Modern World was the title, and it rightly identified processing as the key bottleneck. Similar to a note I published earlier this year, Which Critical Minerals Matter Most, Social Capital helpfully breaks down the 60 USGS critical minerals into 7 baskets: the defense materials basket, the magnet materials basket, the battery materials basket, chip materials basket, industrial materials basket, and the agricultural materials basket. Chamath and his all-in podcast bestie, David Sachs, are very close to the Trump administration, which we've seen can translate into individual stock outperformance for those lucky enough to receive checks from Uncle Sam, like MP Materials, or this week, U.S. Rare Earths, which we'll talk about in a minute. Not investment advice, but I personally bought into Chamath's latest SPAC, American Exceptionalism Acquisition Corp., ticker symbol AEAC, which is focused on AI, energy, defense, and fintech. Pure speculation, but I suspect he may announce a critical minerals deal. Recall, the only successful SPAC he was involved with was MP Materials during COVID, which has traded 5 to 10 times higher since going public. Now on to some news flow. In lithium, Q2 Metals just put out a pretty eye-popping maiden resource estimate for which we have a short update coming from Alicia Milne and Neil McCallum later in this video, so please be sure to stay tuned for that. We've also seen 2 more deals with lithium developers, Global Lithium and Argentina Lithium, involving prepays and price floors from Chinese counterparties. These are further data points that capital is available and reinforces Canaccord's deficit as far as the eye can see forecasts. Earnings season has begun, with Alevra giving another boost to the Quebec lithium narrative, showing strong cash flow. The strong lithium price continues mostly to accrue to spodumene producers rather than converters. And in rare earths, Lynas showed similarly it has become a cash flow story with rising NdPr prices, not just a policy story. But policy still matters, particularly in rare earths, and this week's big story was U.S. Rare Earths acquiring Serra Verde in Brazil, which has lit a fire under the entire Brazilian rare earths complex. Veritas, Meteoric, Brazilian rare earths, all moved up sharply. So we've got tightening lithium markets, macro tailwinds from energy security, capital allocation from China and elsewhere accelerating, and now broader investor awareness from Wall Street to Silicon Valley to DC. Matt, you flagged the super cycle is here about a year ago on this channel. The market doesn't seem to be paying too much attention to the Iran war, at least from an equity sentiment point of view. I guess, what do you have to say? Why don't we start with lithium and the Benchmark and Canaccord forecasts and what you think about them and what's similar and different in your thinking.
I haven't had a chance to go through the notes in any sort of detail, but I think it's good that we're starting to see bulge brackets coming out with talking points on the industry. When we spoke to Iola Hughes from Benchmark recently on the podcast, we did berate her a little bit for her more conservative views on the lithium space. So it's interesting to see that they've come out with a slightly different approach, not just using ESS installations, but using a more integrated approach to forecasting lithium demand. We've also seen Canaccord that you referred to. I think UBS has come out with a big note on ESS and other areas. So it's nice to see that there's a fair amount of publicity coming on. I mean, talking to companies, they still feel that there's a gap in institutional understanding, particularly around the ESS space. So, how strength in ESS demand feeds into lithium demand. And I think that's particularly an area where investors don't really understand the space, don't really understand the ins and outs of the ESS space, the length of the ESS supply chain, and how sort of the ESS cell to battery to container to product system works. So I think we need more work on that side of things. I'm excited by the recent news data points that have come out on EV sales off the back of the high oil price environment, and that has the potential to sort of support EV demand in 26, which we thought was going to be a little bit weaker. If it's a bit stronger than expected, that's great news. And of course, for me, the big question, and you did note our quite significant scars from 22, 23, 24. The big question is how long it takes new supply to come through and where that new supply could come from. So will it come from China? Obviously, we had lepidolite last time around. A lot of commentators aren't aware, but China actually has quite substantial spodumene assets as well. A lot of it's in Western China and in Tibet, and it's infrastructure constrained. But obviously, if prices go high enough, that comes back on the radar. And then we've got Africa, and Zimbabwe. Maybe that's not going to be as positive as we would have hoped it to be in terms of growth. But there's lots of countries in Africa, as we've been hearing from some of the conversations that we've been having with companies, where we could see more supply coming into the market. So how quickly can that supply come into the market in this cycle? So those are the sort of questions that we're dealing with in the lithium space at the moment.
Yeah, I mean, I would concur with Matt. I guess there were a few hot talking points in the past about China brine and all of these things coming through, and it doesn't appear to be enough to move the needle. One of the big torpedoes for us when you talk about that past cycle was African spodumene, so it is something to keep an eye on. Again, how much can new areas of uncoordinated supply without decent exploration work and resource definition, etc., fill gaps that are now far bigger as demand, continues to grow, and the increase is 300,000-400,000 tons a year. This was always the thesis behind, structural deficits as far as the eye can see. We're now getting to that point of 300,000-400,000 tons a year, so harder to fill those gaps. So we'll have to see. Matt, I'll just throw back a question to you. The way I've always calculated demand has been, if it goes in a cathode, it has to come from somewhere. But we've noticed that battery production for ESS versus installation, there's been a gap. Your thoughts on inventory build in that area, if that poses any kind of a risk for supply?
I'm going to talk, and hideous plug here, but I'm going to talk about inventory build in the lithium supply chain, in the downstream supply chain, more in the webinar that we're going to have next week. I will quantify that also in the webinar that we're having next week. But I think the thing for me is, when you get inventory builds in the system, it's all very related to what demand is doing. So if demand is still growing robustly, then nobody's really worried about inventories building very high. It's if there's a demand shock on the negative side when people will start to worry about inventory build. So as long as ESS demand continues to be robust, as long as EVs activity is bouncing, then I don't think we really have to worry about this blowout in inventories, particularly in the ESS side. But if, God forbid, there was a bad demand shock, and there are two things that worry me with the current environment as it is. The first is that sulfuric acid is a key element for processing of lithium hydroxide. And then the other one is that sulfuric acid is a key element for processing of phosphoric acid, which is a core element for manufacture of LFP cells. So if China struggles to source enough sulfurs for sulfuric acid to produce LFP, then we could get to a situation where demand would be impacted, and that is a risk. So that I walk around with 4 or 5 risks that I'm aware of, and hopefully a few catalysts. That is one of the risks that I am bearing in mind in terms of the lithium space at the moment.
Matt, you referenced there, I'm just going to jump in, our webinar next week. So I'll just take the opportunity for a quick thank you to everyone who signed up following our Patreon relaunch last week. We distributed our quarterly battery materials review for free this first time. But we also will be having a free webinar, the first webinar. This will be quarterly, but next Tuesday at 10 a.m. Eastern time. This will give you a flavor of the deeper research and insights, available at our silver and gold tiers, on Patreon. Check out the show notes below to register for this webinar. And please check out our Patreon page at patreon.com/rockstock channel as well to explore what's on offer at the $25, $150, and $250 per month tiers. So I don't know if you've looked at in detail at the global lithium offtake or the Argentina lithium offtake. I haven't looked at it super carefully, but Global Lithium, had a board, change and control. The Chinese control.
That's a polite way of putting it.
last year. We've kind of lost connectivity to that story, but they have them on a project. They already had Chinese offtake originally, and it looks like they have Chinese ownership. The Argentina Lithium had some agreement with Stellantis a few years ago. It's quite a small resource, but they had $100 million announcement as well. I need to look at the details of them. That they seem to be. I don't want to besmirch them in any way, but the language, I looked at it a little bit squishier than some of the other offtake agreements we saw with PLS and lithium ionic, and the like. But the Global Lithium was pretty vanilla. There was a $1,000 kind of floor built into that. There was a $7 million placement, and then a $75 million prepay. But do you have any comment on that or at all? We could also,
Well, yeah. I think it just shows the desperation of the Chinese converters and the cathode makers, to lock in resource. I mean, at the moment, there is a huge shortage of, lithium raw material in China, and there is a desperation that comes out very clearly when you talk to people who've been to China, people potentially from the lithium producers that have been into China, that have been to conferences recently, that there is a huge level of, I'm going to say panic, but certainly that the Chinese lithium users are very, very keen to lock in supply. And they, in many ways, it kind of reminds me a little bit of the last cycle when we had the OEMs who were sitting there going, oh shit, we're really screwed here. And then they tried to lock in offtake agreements willy-nilly with projects that weren't necessarily going to get off the ground, and I think these are some of these offtake agreements that we're seeing are just sort of insurance policies for Chinese manufacturers to try and sort of lock in some sort of lithium supply.
To be fair, Matt, we experienced that when Howard and I were traveling around and chatting to people, that the Chinese were knocking on everyone's door, even during the downtime, certainly for spodumene lockups. So it's kind of like they've been aware they wanted long-dated material, I guess, looking down the road. And And now I guess there's a slightly elevated bit of anxiety in terms of we've had a dearth of money going into the ground in the last few years. Stuff just hasn't been moving forward. So now we're just facing that classic gap of 2 to 3 years of underinvestment, and now people need material is needed.
I mean, I think the Mana project is slightly more advanced, but I think the Argentina lithium project, they need to do some more evaluation work, and hopefully, getting this agreement in with the Chinese allows them to sort of, well, they certainly get funded, but to push forward with this evaluation work. And I mean, that is something that we're banging into really along the spectrum at the moment, that a lot of companies have been hand to mouth for the last 2 to 3 years. And they really need to start spending on drilling, on feasibility studies, pre-feasibility studies, and sort of taking these projects forward. And then a lot of companies, I think, will have to dust off the feasibility work that they had done, and probably reprice a lot of these studies as well. So there's a lot of work to be done, I think, by the industry.
I'd like to reference it's not just the the Chinese capital availability, but for mature companies like Pilbara and MinRes, they've been able to price in recent weeks very large senior unsecured notes, right? So at quite low interest rates. So I'm looking at the MinRes closed a $650 million note at 6% due 2032. So that's 6-year notes, and then a $650 million at 6.25. That's an 8-year note, and that's refinancing existing $625 million 8% notes that were due in 2027, as well as an iron ore prepayment and $350 million of 9.25% senior unsecured notes due in 2028. So the interest rate environment was actually lower when they issued that paper than it is today, but they are getting lower interest rates today than they did then. I think that's a reflection of the maturity of the business.
That's a function of MinRes in particular, that the iron ore deposit that they were developing was at an early stage, and they were pretty hand to mouth in terms of sourcing that money. So I don't think that's necessarily a lithium specific situation. I think companies pre-production who are looking to source debt are still having to pay higher levels than that.
Fair enough, but MinRes is a producing company with a stable kind of mine services business. That they're diversified, and I have to think that positive lithium prices played some role in the lower interest rate, and Pilbara reflects that. I don't know what their notes were. I think slightly higher, or maybe around the same, but maybe 7%. But like for mature borrowers like that, or mature lithium producers like that, to get 6 to 7% interest rate, that compares to core lithium, which did equity offtake, but the debt piece of cores was secured, and it was at 9%. So capital's available, a bond, equity, debt, prepay, mezz. But why don't we talk, Matt? Is there more about lithium you want to talk to, or should we turn to kind of like this U.S. rare earths?
I'm gagging to talk about rare earths.
Okay.
There's one more thing I guess we could raise is on the lithium front is the Q2 mineral resource, which was an eye-popping nearly 300 million tons. So that's quite something. I don't know the timeline, from here on in, but as far as resource goes, Matt, that's a whale.
I mean, that sticks them roundly into the top 5 largest hard rock resources in the world. After only a couple of years of drilling it, really, which is pretty impressive. And I think what comes out the most clear, and I will obviously touch on that on the interview that we're going to talk to them later. But I think what stands out most clearly for me is how massive it is. So you look at a lot of lithium resources, and they've got 20 meters of pegmatite, and then a bit of a gap, and then another 20 meters, and then a gap, and then maybe 10 or 15 meters, and then maybe 5 or 6 meters. But how massive it is and relatively close to the surface. And then obviously the proximity to infrastructure is a core component going forward in that region. And I think the big thing that we're waiting for is the metallurgical test work, the more detailed metallurgical test work, so we can find out whether they are viable to go DMS only. Because if they are viable to go DMS only, that's going to be a game changer, I think.
And then definitely a hat tip to Tom Woolrich, if you're watching, Tom, because we had a chat to him about this project, Howard, years ago.
We were very early investors in Q2, and we are advisors to now, and hold equity interest in, and we'll be interviewing Alicia. But yes, the fact you're bringing up Tom Woolrich leads me to a tweet that I made earlier, and it was in my last month's, lithium bull, go long where memories are short. Azure, which Tom Woolrich also picked out, sold for $1.1 billion US pre-resource. So we don't even know what the size of that resource was, but lithium prices at the time were half what they are today. Okay, half. Okay, so Q2 is trading at about a 420 million US market value. So you could say, okay, Western Australia versus Quebec, but again, as I mentioned earlier, look at Elevra, right? Elevra just published their results.
Very, very strong results from Elevra. Noticeably, strong results. And I think the thing that stood out for me is they managed to get that recovery up. They managed to keep their costs under control. And because the prices went up, they really increased their cash margins considerably, probably by 2 to 3 times, which is a standout result for the company, I think. So, good on the Elevra management team. They said they were going to do it, and indeed they did manage to do it this quarter.
So for all the naysayers, right, Quebec, you can't ever, Canada, even if you're selling to China, okay, yes, it's more expensive to transport, and the North American lithium deposit is not anywhere close to, the quality, of the Q2 deposit or the PMET deposit, but it's close to infrastructure and it's in production, right? But it just shows how profitable this could become. So there's a lot of talk about other areas of the world, other areas of North America that are attractive. And we like a lot of the places, sediments in Nevada and, the Smackover and other places. But the reality is, it's Silver Peak, that produces, and you have some conversion in North Carolina. You have some conversion from Tesla in Texas. And North American Lithium, had an offtake, or Elevra had an offtake with Tesla. I don't know if they're selling there, but the reality is, even for those integrated projects in North America, whether they be clay or, or DLE brine, right? There's always a question, well, where's the material going to go? Like spodumene really could only be converted in China. But to be honest, lithium carbonate, if it's produced, in North America today, probably still needs to go to Asia for conversion because there's not too much cathode production here in the US. So anyhow, we've always been bullish on Quebec as a jurisdiction, and Q2 is very attractive. And we think that there are very significant undervaluations depending on where a company is listed, whether it be TSX or ASX, and where the project is located, whether it be in Canada versus Western Australia. So not sure that the Western Australia premium should apply necessarily. But on the other hand, you need, people like, Hancock, Gina Reinhart, and I don't know, is it Mark Creasy, and some of the other billionaires in Australia to, where are their Canadian equivalent in lithium bidding up assets, in Quebec. So we'll see. Robert Friedland, can you hear me?
I think the problem in Quebec is you've got the Quebec government paying for the assets, but because they skate a little bit under the radar, you're not getting as much publicity as you are when Gina and the rest buy the Australian assets.
We'll see. Rio Tinto has assets in Canada as well as in Australia, and we understand they're going to be a meaningful sponsor of the Fast Markets event coming up in June 22nd to the 25th. Matt, you and I will be there. We're strategic advisors to that conference, but I'm very interested to hear what, as I understand, the head of the Rio Tinto lithium business is going to be speaking there, and that will be, I think
that'll
the first
be standing
time.
room only. That presentation, I should think.
Exactly. And so I'm going to be looking very closely, not just on Argentina, but to see what the plans are, because there is conversion through Bécancour that is well advanced there, and they have the Galaxy. They're most likely, I bet you they're going to announce which of Galaxy or Wabuchi they're going to do, and I think it's likely going to be Galaxy. But if they do say that, that's just a further hat tip to the advancement of Quebec as a jurisdiction, which I think over the next 10 years could mirror what has occurred in Western Australia in the past 10 years. So with that, rare earths, Matt, U.S. rare earths in particular, and Serra Verde.
Wow. I mean, we have talked a little bit before, certainly internally. I'm not sure if we talked about externally, but about how, should we say politely, highly valued USA rare earths is for the project that it has. So it's basically taken its very expensive, I'm not going to say overpriced, but very expensive paper, and used that to buy out really the only major producing lithium clay project in the world outside China. And brilliant deal. Brilliant deal for USA rare earths, in my view. It's expensive, but it puts them on the rare earths production map, and it gives access for an American company to heavy rare earths. And this has always been the problem with MP Materials, that the Mountain Pass asset is very focused on light rare earths. They don't really have a lot of heavies, but the US industrial complex increasingly going forward is going to need heavy rare earths. And these ionic clay deposits have very high shares of heavy rare earths in their rare earth baskets. So, I think it's a great deal. But I think what is also very important in the deal is it puts a lot of these other ionic absorption clay projects on the map. And we have a number of these projects in Brazil at the moment. There are some in other jurisdictions as well, but Brazil is certainly very much of interest. And it comes back to what I was saying about Brazil, what I have been saying about Brazil over the last sort of 5, 6, 7 months, that it's really got some of the most exciting geology in the world in terms of materials that are oriented towards the energy transition, towards the high-tech industries. And rare earths is just one of them: lithium, graphite, nickel, cobalt, manganese, phosphate. It really has a lot of these very, very important elements, niobium as well, key for the energy transition. So, great that it started to put some of these development projects on the map, because one of the things that they have been struggling with is, even though rare earth prices have been strong over the last couple of months, a lot of the stock prices have not been following. So it's great to see these stocks getting a bit of a bid. But for me, there's still quite a lot further to go.
Okay. A lot of people were skeptical. I don't know U.S. rare earths well, but I had heard about the Round Top project for a while, but and the valuation of that company, a lot of people were skeptical, was justified based on the Round Top project. But they've used their highly priced paper, to make acquisitions now, I think on the magnet side and now on the heavy rare earth side, with the support of, the U.S. government, right? The Commerce Department has, gave a verbal commitment, or maybe more than a verbal commitment, but they didn't fully give the money. But that enabled a very large, pipe transaction. So I don't know if you have comments on that, but it shows to me like stocks are often vehicles, right? They're not necessarily like you have a currency and you could do things with that currency if you put other ingredients in place. So it's not just having great deposit. If you have an innovative, forward-looking, management team, and you have the right financing partners and good political connections, you could do a lot. So Serra Verde,
it's like the MP Materials Management team. I mean, I think when that came out of bankruptcy, a lot of people felt, well, what can they do with that ore body? But they have, done a lot with that ore body, and they've gone sort of midstream and downstream, and they've attracted the US government in to fund them. And they've done really well. So I think what we're seeing is evidence of entrepreneurial management teams knowing, which buttons to produce and to push, and which levers to pull with government to enable them to do what they need to do to develop, to develop out their companies. And there are some other very interesting projects in Brazil. Yes, ionic clay projects. Yes, rare earth sands deposits. Yes, primary rare earth deposits as well, with very innovative management teams. So it's going to be very interesting to see what those companies do over the next 3 to 5 years, and whether they can, lock into the trends that we've already seen starting to emerge over the last year.
Well, one of those sands deposits you mentioned, in Hyperion X, they have heavy rare earths and yttrium in Tennessee. And I don't think the market, they think of that as a titanium story, not a rare earth story. That's something we expect to dig into in coming episodes. But Sir Mick Davis, ex Strata and Project Blue, or Vision Blue? Sorry, Vision Blue, his vehicle. This
Project Blue is a bit different.
Yeah, it is. Yeah, Vision Blue is this is a big success. Do you have much history or know about Serra Verde and Mick's involvement in that?
I don't know very much about Mick's involvement. I mean, obviously, I knew he was involved. He has fingers in lots of pies in the high tech space, in the battery value chain and everything. So, we've been following the development of Serra Verde for a number of years. I mean, I think one of the nice things about USA Rare Earths coming in and taking out Serra Verde is it means it's a public company now, and we can get an idea for what it's producing, how it's producing it, what the asset is, etc. And I think that gives us a little bit more transparency on the space, because it has been a struggle, and obviously with the Chinese rare earth space being so opaque, it's very nice now that we've got all of the Western producers in public company structures, which then gives us a little bit more of an understanding of what's going on outside China.
So you got MP, Linus, Neo Performance Materials, and now US Rare Earths as Western producers and you're right, and the valuations of all of those companies are quite large. So this is something I think we'll discuss in our Patreon quarterlies is this disconnect. If you look across our scoreboards, why should producing rare earths companies, trade at 10 billion market caps, when their production volume and their earnings are not necessarily what, lithium producers of similar quantums might get. And well, there are price floors, right? So that gives predictability and visibility. There's government backing, et cetera. But, I'm not saying that the rare earths companies are overvalued, right? But lithium companies or other, like if you look across commodities, why should there be such disconnects? If fundamentally, companies are in business to make money, and you pay a multiple, on the money that they're going to make, and based on the growth and then the visibility and predictability, of that. So I think that's very interesting. I want to switch back really quickly for lithium in Quebec for a second, because I forgot to mention that the Winsome Lift merger is imminent, right? I think there's a board vote of Winsome shareholders on May 7th. I don't think that the Lift shareholders have to vote on it. I haven't done the calculation yet, though. I mean, Winsome stock has started to rise a bit, but I think there's a significant arbitrage. I'm going to look into this and bring it up, maybe next video on what that arbitrage is. But the market's not pricing that as if the merger is going to go through, in my opinion, right? So I think, and that's an interesting combination, right? That's the Adina asset is good. Lyft has Agnico Eagle as a major shareholder. It's a well-capitalized company. Anthony C., who used to be ran Galaxy and is known in the investment community, for lithium, is the chairman of that company. They're going to have ASX and TSX listing now. So any Winsome shareholders out there, of which I am, I'd encourage you to vote your shares, because I think that merger is a good one.
Howard, what you might find is that there's not a lot of liquidity in borrow and so on. So normally arbitrages would close that gap probably tighter, but there probably just isn't the stock to do the shorting and on the lift side to be buying the Winsome to close the gap. So it might just be one of those ones you have to wait for the deal and then it finds its place.
That's a fair point. Winsome shareholders, would be receiving, Lyft equity, and combined. And I understand, like, Lyft has some very tight, there's always a tight share register. So they've had, alongside Agnico Eagle, that there's some rich family offices connected to that story that I think are long-term holders and believers, in it. So there hasn't been much news flow about this since the merger was announced. But once the merger goes through, which I think will be, this quarter, I expect you'll hear more about what the plans are, whether or not they're going to revive the Renard option, or what's the path to bring this into production, because that's a relatively advanced asset as well. Anything else we should talk about before we have both Anson, Bruce Richardson, and Q2 Metals, Alicia, Milne, and Neil McCallum talking about the eye-popping resource estimate?
I think that's certainly enough to be going on with.
Okay. So with that, thank you guys again. Look forward to next week's webinar on, reminder, Tuesday, 10 o'clock Eastern time. Join Matt, Rodney, and me for that proprietary. Matt's going to give a presentation of 20-30 minutes, and then there'll be audience Q&A as part of that. Have a good weekend, guys. And now for a quick update with Bruce Richardson, Executive Chairman and CEO of Anson Resources, who we interviewed last month, but has made a few important announcements in the past few weeks, which we'll lay out here, as well as some additional significant milestones ahead, in particular as it relates to Anson's Green River lithium project in Utah. For disclosure purposes, RK Equity is an advisor to and holds equity interest in Anson. This discussion is for informational purposes only and should not be considered investment advice. Please do your own research and read the disclaimer at the end of this video. Matt, as always, is joining, and he'll dig in with the questions.
Hi, Bruce. Long time no speak. Really nice to see quite a few interesting press releases coming out this month. So I think the one that really stood out for me was the diamond results from the Green River project. And can you just sort of talk us through a little bit what the higher porosity means for the project and potentially for the resource going forward?
Sure. So it's higher specific porosity. So it's a little bit different to porosity. It's the amount of brine that you can expect to get out from the rock type that's there. And how you do that is you take diamond core, which we are able to find some that had been taken in a previous drilling program. And there's two different ways of measuring how much porosity there is in the rock. One is that they inject gel and then weigh it before and after, and that gives you the space that's in there. And the other one is using an NMR, which is just a sort of a nuclear wavelength which goes through there to identify it. Why it's important, it gives you an estimate of extractability, I guess that's the way of saying it, but getting how much brine would come out, which helps you in your JORC resource estimates.
Okay, and what does, I mean, you've got something like a 40% value increase in the level of specific porosity. So what does that do to the certainty and potentially the size of the resource for the project?
So it goes into the modelling. There's an independent company that does that work, a JORC resource estimate. And porosity is one of those things which they examine to determine the size of your resource and how much you might be able to get out during production. So apart from porosity, we've also increased the area. So between the last JORC estimate and now, we have increased the area, the surface area or the mineral right area. That's one parameter that they take into consideration. We have also drilled at Mount Fuel and given a higher grade of 148, but it's also about 11 kilometres between the two project areas, and then we're finding a uniform aquifer between the two, so that area of interest also increases. So when we look at those maps that we put out in our announcements, you see the JORC circles, so they're getting closer together and continuous across the whole area. So that'll give us a change in the JORC resource as well, with greater surface area, greater area included, and then there's depth. So in the announcement we put out on porosity, we also identified that we had modelled the depth at the Mount Fuel well, which is also greater than what was in the original JORC resource estimate. So all of these add up on top of each other, the cumulative, right? So if we have 6% porosity was what they used in the original JORC resource estimate, now 8.8, so that's a 40% increase. Area also increased, and then grade also increased. So you can see how all that accumulates and gives us a much larger JORC resource, which is important when you come through to doing the financial analysis.
And the consistency of the aquifer and the fact that you've put this drill hole in the middle, it sort of increases your certainty, does it?
It does, yeah, and it's what they've been looking for. Is that we know that from previous drilling programs for oil and gas that the brine is there, and we have numerous historical logs which identify the existence of the brine, but no one was interested in measuring it for lithium. By taking this sample in Mount Fuel, it increases the area substantially, and also increases the grades from about 138 to 148. So it's very similar contaminants as well, not just the lithium amounts, which is very important. So what it tells us is that this, we've made a claim previously about a very big resource that's there, or exploration target that's there, and that's based on the brine results from the oil and gas drilling. We're now defining that area in sort of JORC terms, and that's what Mount Fuel was all about, and getting a grade there of 148 was very important.
Excellent. Okay, so that's really positive on the lithium project. And I think since the last time we spoke also, you announced that you completed the drilling program at the Yellowcat project. So can you just talk a little bit about what you did there?
Yeah, so this area has previously been mined, and there is a trend which we wanted to extend, see if the trend extended into the area that we own, the mineral rights. And so we put a small drilling program together to identify whether it had. As you can see from the photos, there's some interesting colors in there, and the ASX doesn't like us to talk about that too much, but it looks interesting. And of course, we've sent that off now for analysis, and we're looking to confirm that the uranium and vanadium trend that has previously been identified continues into the area that we are currently in, and that would make quite a large resource target. That's a phase one. Phase two is to go back and re-drill the historic wells that are there to confirm in a JORC resource manner that the resource is what was originally identified, and that will give us a very big resource which we can then consider how we move forward with that.
So you have a historic resource there. You just need to restate it under the JORC compliant terms.
So that's right. So it's pre-2012 drilling program. Some of it has been mined previously, and they did a lot of underground shafts by hand. So it's difficult to estimate how much of that had been taken. But with the drilling program, we will be able to work out what the resources that's left behind looks like. And add that to what we've just drilled, taken samples for, and that'll give us a really interesting project there.
Excellent. And I mean, you've got the assays, so they're at the assay lab at the moment. Have you got any guidance? I mean, I know it's how long is a piece of string, but any idea when the assay should start to come back?
Yeah, of course. We're anxious to get those results too. Uranium is a little bit more difficult or takes longer than others. We know the samples that we've submitted to the lab have been assayed for vanadium, but for uranium, they need a specialized lab, and that's located in Canada. So the samples are on their way to Canada, and then, you throw a dart at a dartboard. That'll tell you how many weeks before we can actually see the results.
Okay, great. Well, we look forward to when the results are published, and we can talk about them a little bit more.
Yeah.
All right, thanks for that, Matt. And Bruce, what should investors be looking for in the next kind of couple of weeks? You have like a PFS, or what's happening there?
Yeah. So as I said, the all that information that we've put together for a re-estimate of the JORC is underway now, and we expect that in the next few weeks to be completed. That will also, of course, be part of the PFS calculations that we're doing, which are also in train. And so the JORC resource first, and then we can expect to see some of the PFS results after that.
Okay, those are very substantial milestones for any project, and the market's woken up a little bit for Anson and broadly, certainly, and we've seen other Utah. Lithium stories getting some, airtime within the lithium community. So we've said for a long time that Utah, relative to other jurisdictions and, the smackover and Alberta and California and Germany have had less of a profile, but, this is very much a viable location in the U.S. And one which we think deserves more attention. So stay tuned. Thanks a lot, Bruce. We'll look forward to talking again soon.
Thanks, Howard. Thanks, Matt. Appreciate it.
Cheers.
All right. And now on to Q2 Metals, the hottest lithium exploration story at the moment, and perhaps ever, as we've discussed before. The highly anticipated maiden resource estimate dropped this week, and Matt's going to dig in and ask some questions to flesh it out a bit more.
Okay, so guys, 295 million tons at really high grade. Neil, couldn't you have found an extra 5 million tons from somewhere?
Yeah, you're not the first person to say that. I mean, if you round up 295, you can get, that's actually 300. So we do have a bit more in the exploration target category. So I think that, you can round up with that too. That's like 44 to 67 million tons of.
Okay, so let's talk about that exploration target since you mentioned it. 44 to 67 million tons. This is only the exploration target for the rest of this year. It's not for the rest of the project. And that's only on a very small part of the license area. So actually, how much of the license area is the exploration target and the existing resource does it take up?
Yeah, I'll spread that question out into kind of two parts. The exploration target is really in the immediate area of the resource. So we're talking basically what has been drilled at wider spacing, too wide to include in the inferred category. So it's kind of encompassing a lot of the strike length to the south and to the north, where we just haven't had a chance yet to drill. So that'll be our work this summer to just keep going. We're not going to be adding tons for just the sake of it. I think it'll be a strategic drill campaign this summer. But to get on to your other question of like how much of the entire land package have we sort of included in that exploration target and resource, it's a large property. So, I'd say area-wise, maybe like 1 or 2% of the entire land package is included there. And then as well, like the strike length of the greenstone belt is about 20 kilometers long east to west. And we've really only defined the resources in about a kilometer of that 20 kilometers. So there's a bit more work to do to really make sure that we're not missing anything.
That the mineralization is open really in all directions.
Pretty well. Yeah, exactly. Yeah. I think north to south is probably the highest probability because that's where that core zone of 200 to 300 meters wide continuous pegmatite body lies. So we can just go along strike to the north and south to find more, presumably.
So you've got a mine here, but there could very well be, well, you're probably not allowed to say that you've got a mine, but I can say that you've got a mine here. But there's probably much more resource within the license area as well.
Yeah, I mean, it's can't really know for sure until we test it. So we're going to do some, more prospecting. We did a little bit last year, so we'll get out again and do some additional geochem just to make sure that we've understood the true value of the property as a whole, because we're obviously not in need of defining more than 295. I think with it being the fourth largest globally hard rock lithium deposit, I don't think it's like necessary that we find more, but I think it needs to understand the actual true value of the property to know whether there are more or not. We can take the example of PMET's Shakachuanan project that I think they're up to 13 different zones along the strike length of their 25 kilometer long property. So these things often occur in clusters. So the fact that there would be only one Cisco deposit on the project, I feel like that would be a somewhat of a rarity, geologically speaking. So I think it does justify a little bit more work. But again, not to belabor, that sort of regional stuff, we do have more work ahead of us in the zone itself to upgrade as we progress the project from inferred into indicated categories. So that's definitely going to be a key component.
Will that be starting to happen in this drilling season?
Yeah, well, I mean, the cutoff for what we just put together was mid-December of 2025. So because we have to wait for assays to come in, the work that we've done this winter has pretty well been mostly in that indicated level spacing. So we're already on the way to get there. So this summer will be a combination of, like I mentioned before, the along strike exploration plus the defining that indicated level in the core zone.
Okay, great. Now, one of the things that really stands out for me about the resource is its massive nature. Not that it's a big resource, although it is a big resource, but the true thickness is in excess of 450 meters in places, and you don't really get that in many of these big pegmatites. I mean, to give you an example, most of the Australian mines, with the exception of Greenbushes, the pegmatites are 10 to 50 meters thick. And that's really important from the mining point of view because you get contact zones on the edges of the pegmatite. They alter the mineralogy, the recovery of the ores. So you don't really have that to the same extent with this deposit, do you?
Yeah, that's right. No, exactly. Most of it, I think it ends up being probably about 80% of it, of the resources that were defined, are in that large, wide, continuous body. And we do have some material that's in those thinner veins that are like other projects out there. I think that you nailed it, that it just introduces more complexity to the processing because you're going to have potentially more waste rock included going through the mill that can potentially add more iron, which is an important factor to have a clean concentrate. You want to avoid that iron, and to do that, you avoid dilution from the wall rock. That's the main component there.
Okay. And then the other thing that stood out for me from the release is the cross section. Insofar as you've got that big, massive body, and the bulk of it is in your conceptual pit shell. Something like 270 million tons of it, of the existing resource. Have you got like a working strip ratio at the moment, or is it a little bit too early for that?
No, we're looking at approximately 2.5 to 1 waste to ore. So, I mean, that's probably one of the better ones out there for lithium open pit projects. I think I've seen out there like 3 or 4 or even up to 7 on other projects. So the benefit here is that we have that large, wide mineralized zone that's included in the open pit, plus all those other zones to the edges of it too, that really help that strip ratio. It's not spread out, they're not individually that far away, which is quite nice.
Okay. And Alicia, where are we in terms of PEA and further testing and evaluation of the deposit? What are your plans from here?
Yeah, so Neil's got a big season ahead of him in the summertime. We just finished our winter drill program. So aside from assays coming, we're going to start up our baselines probably towards the end of May, getting out there, and the environmentalists will be setting up all their workstations and such, and then drilling to get to the indicated category for an update to the MRE. And then we've already started working on PEA stuff in the background, some of the desktop studies that we can do now while we were waiting for the MRE or while we're drilling and such. So, just continuing to push it forward as fast as we can. I think the PEA we're sort of estimating early 2027.
Okay. And both of you, are we going to see more MET test work over the course of the next sort of 6 to 8 months or so?
Yep. Yeah, we're already planning some of that now, getting it to the lab, and that'll be following up on our 3 composite samples that we've done so far. We're going to be spreading out to other parts of the deposit just to make sure that we've got that nailed down and confirmed, and as well just improving on it, because that was sort of the first pass, and we can tweak a few little things to make sure that we're optimizing things.
Okay. And Alicia, just for the listeners, can you sort of explain a little bit about the sort of permitting pathway? What do you have to do to actually get this into production from, big discovery to big mine?
Yeah, I mean, we're still relatively early days, having just issued that MRE. So, the key for us right now is to start those baselines, because you're going to need at least 2 full years of the baseline studies before you can even submit for your environmental assessment. So that's where we're going right now. Permitting wise, all we have in the books right now is waiting for a permit to come through on the road and camp that we want to put in place to cut down on the helicopter costs. So yeah, we're still a ways out for actually permitting a mine, but it's not unforeseen.
Okay, brilliant.
Preempting any permitting is this comparable that I just tweeted about and have said repeatedly, and our friend Chris Williams at Adamus Intelligence made a comparison to the Azure Andover deposit, which was acquired by SQM and Hancock even before they had a resource, at a time when lithium spodumene prices were half what they were today. And you're trading at less than half of what Andover went for at a time when lithium prices are twice. So therein lies some relative value and market disconnects that are the beauty of the lithium and critical minerals markets generally, that if you're paying attention closely, and we had Tom Woolrich on this channel a couple of times talking about Q2 and referencing his success in identifying Andover and Azure earlier. So hopefully I'm sure a number of our viewers have participated in the stock already on its 900% increase from those times. But, it's not too late. It's hard to chase charts, often like this. But if you just look at the valuation discrepancy at 420 million market value compared to this chart we're going to flash up here, we still see, quite a bit of value. And as we referenced before, Elevra Lithium with the North American Lithium deposit, which everyone would acknowledge is a lower grade deposit, but is minting cash now in this market environment. So Quebec is very much on the map as a producing jurisdiction. And for all the people who kind of wondered if that would happen, and I think it's just the first of many to come. So, Alicia, you're going to be at the Canaccord event, I think, in next month, mid-May, in Las Vegas, and then you'll be in Las Vegas again for the Fast Markets event, where Matt and I and our colleague Ben Hammond will be. So, if any of our viewers are interested in meeting with Alicia, feel free to reach out to us at rockstockchannel@rkequity.com, and we can connect you to the team, especially if you're coming to Fast Markets. With that, have a great weekend, and congratulations.
Thank you.
Thank you.